Welcome to today's episode where we start with a headline that's rattling markets: Iran war's latest economic toll, oil at $115 a barrel. The war in the Middle East has surged past the 2-month mark, rising oil prices to levels we've not seen since the early 2000s. Brent crude is now topping $115 a barrel, up roughly 60% from when the fighting began on February 28. That means, for each barrel shipped through the world's most important oil ports, traders are earning considerably more than they did last year. That surge translates straight into higher gasoline prices. The average price per dray in the United States is $3.99 a gallon, and analysts warn that this spike, common enough to bite summer travel plans, could drive motorists to look for fuel-efficient routes or even postpone trips. One of the uncomfortable side effects of the war is that it's fed through the very fuel power plants and vehicles rely on. Stock markets have felt the ripples as well. While S&P 500 futures drifted up slightly this Monday, the benchmark index sits down almost 9% from its January high. The Nasdaq Composite fell into correction territory last week, showing investors are jittery about the long-term trajectory of valuations in a volatile global environment. Beyond energy, the war is affecting industrial supply chains. The price of aluminum spiked to a 4-year high after Iranian attacks on 2 Middle East production sites earlier this weekend. Aluminum is a key component in auto parts, furniture, and windows. Manufacturers now worry that the country's dominance in that field will pull upstream costs upward. And the crisis extends to helium, used in chipmaking and MRI machines, where supply insecurity is growing. Political lines are blinking too. President Trump told journalists the U.S. is close to a deal so soon, but also said he would want to seize Karg Island, Iran's key export hub, and spark a debate about the operational realities of the war. He admitted to the Financial Times that he would take the oil in Iran, spiraling to nonsense. Other statements also suggested Iran had agreed to let 20 oil cargo ships pass through the Strait of Hormuz, implying potential troop movements, while a U.S. operation to extract uranium might be on the table. The fighting appears to be expanding. The Houthis, an Iranian-backed militia in Yemen, fired a missile at Israel over the weekend, with analysts watching for a potential disruption in the Red Sea, a vital waterway for Saudi oil exports. Even if the conflict remains localized, every movement and policy decision is now a ripple across the global economy. In short, the war's latest economic toll is still unfolding across energy, transport, manufacturing, and finances. The next week could either see a calm negotiation or a deepening battle that pushes off markets and households into another shock. That's the news you need to stay ahead of. Thanks for listening. Stay tuned for our next episode, where we'll dig deeper into how these unfolding events might affect your portfolio and daily life.